So let's get into this panel here. I'm going through the questions here. Tell us first about the different patterns of testing, right? There's, I look at it as factor modeling, back testing, forward testing. Do you look at it in the same way?
Yeah, similar. It's at the end of the day, it's testing inside the bigger bubble, and then there's different aspects to break down into it. But yeah, I'll typically break it down into kind of factor modeling is the bigger thing, but a back testing, a forward testing, and then I like to throw in a pre-back testing phase as well, and that's something I've learned off of my personal journey and long list of mistakes that I've made as a trader, kind of growing up in this industry.
Pre-back testing.
Yeah.
Tell us more about pre-back testing. I'm not familiar with this. Well, what do you consider pre-back testing?
So I'll tell you a story, right? So when I first started trading not first started trading, after I kind of first got on the right track with trading, I had a mentor, a coach, and they told me about the whole, you got to develop something with an edge. You have to test it to, develop your reticular activating systems, your pattern recognition skill. You have to acquire your data and your figures to make sure that your edge actually works. You can't just kind of go into the market and do whatever. And at the time, right, admittedly, I had kind of I wasn't looking to learn how to trade. I was looking to learn what to trade. So in my mind, I was like, just give me the thing that works, right? If you give me the thing that works, I'll go through this back testing phase because I have to, but I was really just looking for a strategy that someone said was profitable and I wanted to trade it right away. So I was given this strategy and I tested it only in one way. I tested it. I went through historical data for years and years and years, and I tested only the exact way that my coach and mentor gave it to me. And what happened was I would get like halfway through and I would start noticing stuff. And I'd be like, well, that looks interesting. Every time this happens, I notice that. And I would start over and do it again. And then I'd go through the process, hours and hours and hours. I was unemployed at the time, so I was investing like 18 hours of chart time a day. And that's not even a lie, like 12 to 18 a day. And I would keep going through this process of like testing, seeing something, restarting, testing, seeing something, restarting. And in hindsight, that was a gift and a curse. In hindsight, I wasted so much time kind of testing and restarting. The gift was that it really helped my eyes develop. So, I can recognize patterns and read price action really, really good because of all those reps in the chart. But it taught me to spend time before the back testing phase doing a pre-back testing phase. So if you think of your back testing phase as kind of like your journey of data collection, you're collecting data on what you're working on and you're seeing if it works and how it works and what's the best way to do it. Before you do that, spend some time in just like a creative mode. I like to say like a kid in a playroom or a sandbox. Spend some time kind of doing an eyeball test on what you're looking to eventually test and just allow yourself to be creative, right? We are our best selves as traders when we're creative. When we have a strict kind of process to follow, we often get blinded because we're looking at a chart and there's so much stuff happening out there. It. We're only focused on a single thing. But if we can take time to just say, hey, I'm just going to spend 30 minutes just looking at stuff and admiring it and looking for different tendencies, things will start to pop out that we might have not noticed before. And those could be crucial things that you add to your strategy. It could be a filter that stops you from getting in. It could be a filter that allows you to get in. It could be a different way of placing a stop loss. It could be a different way of placing a target profit, right? There's so many moving pieces in there. And in my opinion, before we start our serious round of back testing, because it is time consuming and it's a hate or love experience, we want to know exactly what we want to test. So when I go through this pre-back testing phase, I want to acquire a list of like, hey, these are all the possibilities of how I may trade this strategy or how I may look to do this. And then when I go through my back testing phase, I'm collecting data on all of them. And then when I'm done, I can compare. Well, the A way of doing it was okay, but the B way worked better. This way had a better win rate, but this way was more profitable. Or, hey, only taking target ones is more profitable than taking target one and holding on for a higher one, like whatever it may be. Or this risk management strategy, if I trail this closely, I get stopped out more. But if I trail too loose, right, the market comes back and does whatever. But having that pre-phase where we're basically trying to discover what we want to backtest before we actually backtest is going to save you a lot of time, because now you have kind of every or the majority of situations accounted for, instead of just being blinded by one thing and potentially having to, I don't want to say the word waste time, but use time to go back and do it again every time you get curious.
Yeah, I totally agree. And so coming up with a hypothesis that you want to test first before it helps add so much clarity to what it is that we're actually going to be looking for, and to know if we're getting closer to a result, either positive or negative, right?
Yeah.
Like we might do a test and find out that we don't want to do X, right? Like that's great. But we might want to figure out something and then go off and do more of it. So an example, a personal example, is I wanted to see if I should start to increase my size, right? And I started to figure out, well, what would have happened if I had increased my position size by X amount, right? Like, so if I took my size from risking 0.5% to risking a full percent, or risking 1.5% on all my trades during a certain period, right? So the way that I like to go back and test is to test it not just on winners or losers, but to like look how it would affect every single one of these things. So that way I know the true outcome. And, it's interesting that sometimes we do a test and we find out what we were doing originally was the right way to do it, that it produced the best outcome.
Yeah.
And when we start to think of beliefs, right, because of so much of this conference and everything has to do with beliefs, if we question the belief and we find out, what, the original way that we're doing it is working better, then that gives us that much more confidence in our system and going off and executing and being like, oh yeah, you know what, the market's doing whatever, but I have confidence because I've done all this back testing, I've done all the pre-back tests, and I've done all this work. Now I could go off and execute, and I know what's going to happen after 100 flips of this coin.
Yeah, the belief is key, and that is, belief and confidence. And throughout the conference, we've been talking about psychology and how, the 6 inches between our ears, that's the most important part of trading. If you don't have that belief, like you said, you're open, you're more likely to make those psychological mistakes, right? You talk a lot about mind state and whatnot. Like, you need to be in a fully confident mind state. As traders and investors, we need to think of ourselves like professional athletes, where if you look at any professional athlete, they are fully confident. They could be the worst person in the team or the match or the game. It doesn't matter. They are fully confident in their ability. And having that full confidence allows them to kind of go out there and do what needs to be done without hesitation. As traders, if we're ever to hesitate or second guess or, do something like that, we can miss out on the move that we need to take. And we do that enough times, that's going to throw off our entire edge. So I'm like you, I love testing, and it's not even about getting the right answer, right? It hurts a little bit. Yes, obviously we're human to spend time doing something and have something that doesn't work. But now you know what doesn't work. And it's like any type of kind of, invention, right? You spend 99 times figuring out what doesn't work. It just puts you one step closer to figuring out what does work. It's funny. I just started actually 2 days ago. What's today? Tuesday, Monday, trading a new strategy that I developed. And I had no intentions of kind of creating it the way that I did, right? This is from years of other failed strategies where I was testing strategies. I wanted a specific thing and it just didn't work. but each time there was something within that strategy that did work. So maybe the overall strategy wasn't profitable enough to my liking, but there was a stop loss method I used, or there was a trail stop method I used. There was a target taking method that I used that did work within that. And eventually, if you're taking notes, right, when you're doing something, you kind of pull from your little notebook and say, okay, well, let me test some of these things that worked in the past on this. And I was able to put a few of those things and came together and again, ended up with a strategy that I had no intentions of using. And that's all because of the failed strategies, or I guess finding the positives or the gems within the failed strategies from before. So it's important to understand that just because a strategy fails, it doesn't mean the entire thing fails. There could be good parts of it. It's important to keep those notes because you never know when you're going to use them in the future.
Yeah, totally. And like, that it kind of speaks to one of the earlier panels where we're talking about journaling and post analysis. If we're journaling well, this factor modeling and backtesting, like, it becomes so much easier and so much more relevant because we could go back and look at the trades that we've taken, right? Assuming that we've got a system and we're executing that system and that we believe that this thing works and we're taking what we perceive at the time as the best trades, well, then that gives us something concrete that we could go back and test. Well, if I did this, how would it have responded? Right? Rather than, picking something out of a hat or going back and using somebody else's work, when we're using our own work, it can make it that much more real. Well, one of the things that I back tested too, and that actually ended up resulting in 20 to 40% difference. Right? So if I'm in a drawdown, it's 20 to 40% less. If I'm doing well, then it's going to be 20 to 40% more. Was going back and looking at all my losing trades and started to figure out, well, where could I cut this thing faster without getting stopped out of the big winner, right? And so I did this test, and it turns out that on my trade, so like everybody, if I'm going to share what I actually do, but everybody that's listening, you've got to go and test it out on your own trades and do the back test to see, like, well, how would this have worked on mine? Maybe it works well for you. Maybe it doesn't. You have to verify it. That's the whole point. So what worked so well for me was progressively raising my stop to break even while keeping it below these three things. All three need to be checked off. So below the 10-day exponential moving average, below a whole or a half number, right? So if it's trading at $100 to raise the stop to $99.90. Mm-hmm. And also to keep it below at least the prior day's low. When each of those three things are in place, then it's safe to raise a stop, and I wouldn't get stopped out of the trades that ended up being the big winners in, I believe it was 95 or 96% of the time. There were a couple of cases where I would have been tagged and the trade would have ran off without me. But to cut the losses, to cut so many extra losses that much faster, we're shifting the equity curve. We're shifting the distributions of wins and losses to, we've got this is the zero mark. If we have a loss that's over here versus a loss that's over here, it's so much easier for the wins to lift the ones that are closer to zero than the ones that are even over 3%, 4%. If we're able to take smaller and smaller losses, it's the wins end up counting for a lot more. And that's what the results of this test did for me.
Yeah, that's brilliant. I think one of the things that a lot of newer traders get caught up on is win percentage, and that being kind of the quick fix, where if my strategy isn't producing what I wanted to produce, I just need to win more. And understanding that winning more isn't always the key. Yes, it feels good to win. We'd all like to win more. Don't get me wrong. But I love what you said about attacking different ways. And one of the first things I do in any type of strategy development or back testing is I look for those three key areas, right? I have what I call my baseline test, which is kind of like the generic bare bones test of the strategy. and then I get to work on it. And I try to target 3 different areas when I get to work on it. One would be, is there anything that I can add to win more or lose less, right? So, win percentage, right? Is there something some type of filter, something I can use that's going to get me more wins or keep me out of more losses? The other 2 is there anything I can do, and this is kind of like the maximum favorable excursion that you talked about, is there anything I can do to kind of cap my wins higher to that max level? So how can I increase my average win? The third thing is, how can I decrease my average loss? And if you just look at the numbers, and if you have a set risk reward and you increase your win percentage overall, boom, you're going to increase your profits. If you have your kind of baseline test and you increase your risk reward, meaning you win a little bit more on each of your wins and keep your losses the same, boom, you're going to be in more profit. If you look at your baseline test and your wins are the same, your win percentage is the same, but you decrease your average loss, boom, you're going to be more profit. So there, and of course, if you can find a way to do all 3, then boom, that's magical. But it's not all about win percentage, right? Losing less, whether it's losing less percentage wise or losing less from an actual like monetary risk perspective, is the same thing as a win. And that goes for even like, hey, like Austin said earlier, if I can get out for a break-even trade, that if I can stop a loss and turn it into a break-even trade or a small loss, that is essentially a win because you didn't lose as much. And that's the mindset that we need to have as traders. It's not all about winning more. Sometimes it's about losing less.
Yeah, absolutely. Absolutely. There's a question that came in from Matt. Matt's asking about platforms available for backtesting. How do you do your backtesting? Are you doing it through a platform like software? Are you doing it manually? Well, what's your preferred method?
I'm old school. I got a stone and a chisel and I carve it in. I'm like Pat, right? I got an old soul. I believe in manual backtesting. Now I think it does depend on the type of system or strategy that you're trading. And I do think maybe again, sometimes a blend is appropriate. The reason I like manual backtesting, and it's not great from a time perspective, but it's good from a psychological perspective. I like manual backtesting because so much of backtesting, like we mentioned earlier, is about developing a belief. So to answer the question first and foremost, I backtest on the same charting platform that I use. So there's no software. It's just old school, going back in the time machine and doing a replay mode or clicking through one candle at a time, literally. But I want to simulate as closely as possible what it feels like to actually trade this. Because again, there's one thing to have the numbers and know that it works. There's another thing to manage our mind state and say, can I actually trade this? So if I'm backtesting something, right, I just don't want the numbers that say, hey, you won this much, here's your profit factor, all that fun stuff. I want to feel it. Like I want to feel what happens if I take 10 losers in a row, because if that doesn't feel good in backtesting, how the heck am I going to handle it in real life? Like I'm not. But I want to go through that process also and see that, hey, maybe I took 10 losing trades in a row at some point, just throwing out random numbers, but then I recovered from that and I made new equity highs, right? I need to experience that, because if I'm going to trade it live, and if I'm going to have the ability to stomach that drawdown and have confidence that, hey, this is normal. This has happened before. It's not the end of the world. I don't need to panic. I don't need to system hop. That I just need to trade through, weather this storm, tread water until the next extension comes, right? That is going to help me. So for me, the main point of backtesting is data collection and whatnot. But from a psychological perspective, it is the only way that I can gain belief in what I'm doing before I'm actually doing it. And it's not going to be the same as trading live. It's not going to be the same as demo trading. So there are people out there where it's like, well, what's the point of demo trading or back testing? You can't simulate the live kind of feeling that we feel when money is on the line. And that's true. You can't. But this is the closest possible thing that we can get. And it's the same thing as like, yes, past results aren't predictive, or, past results won't tell you what the future results are, right? No, technically they don't. We never know what the future holds, but it's the closest thing we can get. So we want to use it. So I'm good old fashioned manual backtesting. I do think there is a place for automated backtesting, especially if, let's say I've backtested on a certain asset and I know that something works. And I want to expand my portfolio. Now I can maybe go to something else and run a simulator or whatever like that and have it spew out the numbers after I've already gained that belief. And that's going to kill me a lot of time. But I think when you're first going through it, if you're trading like a brand new strategy or something of that sort, I think you got to manually back test it first to get that feel and experience. And then once you have confidence and you're looking to grow, then you can automate it using a software or something like that.
Yeah, I'm the same way as you. I prefer the stone and the chisel, and really the spreadsheet of going through one trade at a time, and yeah, that tangible feel, man. There's like, and then to speak to too, when you're going through the back test, and then you're starting to do the forward test. Right, like so I look at it in these three stages, right? Like, so you've got your factor model, so you started to figure out, well, this is what I want to test and why. Now I'm actually going back and doing the work in the spreadsheet or the stone and the chisel and figuring out how this actually works. And now that I've proven to myself, like, yeah, that like this is something that I actually want to put money into, then the forward testing part starts, and that's where I think that some people can start to think that, oh, well, I tested it. Now it's time to go hog wild and put my whole account. No, like this is where the forward test just starts, right? Like, oh, we want to start out small because then it's like testing in stages. So you're ready to start to put a little bit of capital to work. It's like a friend of mine just studied he's getting his pilot's license. Right? Like the first thing is like you're in your simulator and you're doing that part. Then you're going up with a coach. Like you're not just going up all by yourself. You're not ready yet. Like you have somebody else there and you're getting your hours in. Like I would put that as what forward testing is like. You're testing it out, but not with your whole account. Maybe you're starting to test it with like 10% of your account or whatever the amount is that won't kill you if you lost it all. But it should sting a little bit, enough to where you actually care enough about it, where like it starts to influence. Well, what do you think?
Yeah, I agree. It's funny you talk about skipping that process. Are you familiar with like the Leroy Jenkins video at all? Have you seen that before?
Oh yeah.
Leroy Jenkins. Yeah, it always reminds you of that. If you guys are go Google or YouTube search Leroy Jenkins, but I think they're playing like Warcraft or something like that, and it's a bunch of the players in a huddle, and like they're going over this like intentional, deliberate strategy to like win. And then there's like Leroy Jenkins, who is like the impatient trader, who's like, man, I'm tired of sitting here. He just runs in. He just goes, Leroy Jenkins, and he runs in to take on everyone. Like, what are you doing? And he gets killed, and everyone else gets killed. But yeah, like a lot of traders want to skip past that part. It's like, man, okay, come on. I've got my arsenal. I got this thing that works. Like, I just want to let me go trade it, Leroy, and go in. But you got to go through that process. It's very important, right? You think about, and a lot of traders skip it because of time. We're in a rush, instant gratification. We want to do it as quickly as possible. But I think we can both say this, right? Our journeys have been, and everyone on this panel, our journeys of learning to becoming successful traders has taken a long time. None of us here did it in like a day, a week, a month. It took years. And during that time, it seemed like the longest time in the world. But when you look back in hindsight and you realize, like, so for me personally, I'm on year 16 of trading. And it's like, I don't know how I got to 16 years. But I look back at like the 2-3 years of struggle, which were an eternity back then. Man, it was nothing. And I wish I would have taken, done the right steps then. So it is worth it to take those extra steps that Mike is talking about. It's worth it to make sure you're fully prepared before you go into war like Leroy Jenkins, because the market is fierce. Like if you are not ready and if you have not earned your right to be there, it will eat you up and destroy you. And for newer traders, in year one, especially year one of live trading, like if you can just survive without going broke, that's a win, to be honest with you. And it's going to seem weird to say that, but the goal is to survive, and you survive and you learn, and then you kind of earn your right to be in the market, and then you go to those next levels. So if you know that first year is going to be tough, or whatever year is going to be tough, trade small. Trade small, enough so it kind of stings, like Mike said, so you get that psychological feeling and you build that tough skin. But you should trade small enough that you're not worried about blowing an account, that you have enough kind of chips at the table to survive the long game. And most people that can survive that first year of hardship, they go on to be good traders. It's the ones that blow accounts and then bail and switch, and those are the ones that we never see again. So survival is key, and make sure you're positioning yourself as a newer trader who is going to make most of their mistakes in their first few years. Give yourself enough cushion to kind of just tread the water until success comes for you.
Mm. So 3 years in, and then you started to turn the corner. How'd you turn the corner? Well, what was it? Well, what helped you?
Process. I can tell you what, I was like many traders. I blamed everyone. I blamed broker. I blamed CNBC. I blamed you, Michael. I blamed everyone. Anyone I could think of. I blamed everyone except for myself. And I remember I had poor trading results. It was the end of the year, and I did this audit on myself. And this was basically, I reviewed my trades, and I reviewed what my trades throughout the year would have looked like if I executed them perfectly. And then I compared that to, it's like an A/B split test. I compared that to my results where I was making all types of dumb mistakes, taking profits early, moving stops back, like entering too late, entering too early, you name it, right? And I noticed that, and I don't know why I did this earlier. I was too busy blaming everyone else. I noticed that if I just would have executed the trades the way I was supposed to, I would have been profitable. And it was at this point in time where I had basically given up on trading, right? I had quit 3 jobs to focus fully on trading, right? I don't recommend anyone doing that. It's not that I was overconfident. I did think it would be easier than it was. But also I needed that urgency to really take it seriously. I know without my back against the wall, that's just knowing myself as a person, I was only going to do enough to just do enough. I wasn't going to really go all in. So I had to put myself in that position. And I thought I'd be successful pretty quickly. It took longer. And the nest egg that I had saved by going full time was running out. So I'd pretty much given up on trading. I accepted the fact that, hey, I'm not going to be a full-time trader. This isn't going to work. So I just said, hey, you know what? My mentor, my coach has been telling me process over outcome. Just take good trades. We're just going to spend the final 6 months of my trading life just doing it. And I made this goal where instead of focusing on the results, I was going to focus on making less mistakes. So if I made 30 mistakes in January, right, my goal in February was to make no more than 29, just eliminate it by 1, right? Kaizen philosophy, continuous improvement. And I started doing this. I started playing the game where I'm just grading myself on execution, not results, grading myself on execution, not results. And it was funny. It was like I think it was actually around this time I got like my March statement. And the March statement came in. I'm used to seeing like the parentheses at the bottom of the statement, which means you lost money. And this one didn't have them. And I emailed my broker back. I said, hey, man, I think you sent me the wrong statement because, I lose money every month. Like, this is not mine. And they hit me back like, hey, Akil Stokes account number, blah, 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 blah. I'm like, yeah, this is your statement. I'm like, what? And it hit me. I was fully focused and consumed with process, playing this game of eliminating mistakes. And I was down to like 3 or 4 mistakes a month. And it hit me like, man, like doing this, the results worked. And all this back testing stuff was actually true. I was seeing my results. And I never looked back from there. It was that last bit of belief, actually seeing it, because I was stubborn as hell. I didn't want to believe it. But it took actually seeing it, like what it took, focusing on the process and getting the outcome that I deserved. Game changer for me. Never looked back. Never looked back.
Yeah, wow. So this factor modeling and back testing and forward testing, this skill is a pretty important one.
Yeah, it was right there in front of me, and I just never cared, Mike. I just never cared. I did all the work, but I did it just to check a box, and I never actually paid attention to it. I wanted to make as much money as possible, as quickly as possible, and I was just blinded to everything else. And you feel like such a dummy doing that. Yeah, I mean, learn from my mistakes, guys. Learn from my mistakes, or learn from our mistakes, I should say.
Yeah, totally. Well, why would you say that this skill gets so little attention? I think that it's probably the one that gets the least amount of attention among all the skills that are needed.
Yeah, it's not fun, So I'm a former athlete, right? Still try to pretend to be an athlete every once in a while, but people don't understand this about athletes, right? They see them on match day or game day, whatever, and even, I mean, you'll notice with marathon training, right? They see the end result, right? They see the tip of the iceberg, but they don't see everything that goes into it. They don't see the practice hours. They don't see the weight room hours. They don't see all the Sunday long runs that you don't want to do, but you're waking up 6 o'clock in the morning because you have to do it before it gets too hot. Like they don't, like all that stuff isn't sexy. And that's what separates the successful from the non-successful, right? Everyone wants to be successful until you see what it actually takes to be successful, right? And it takes a massive amount of sacrifice, whether it's time, whether it's money, whether it's energy, all of the above, sacrificing with your family, right? Telling your kids like, hey, I can't play right now because I got to get this stuff in. I remember as a younger parent, when my kids didn't know what I was doing, they'd come into my door and like, I'd have to like, hey, you got to get out of here. And they sit there with the puppy dog face, like, why can't you play with me? And like, my heart cracks inside of me, but like, that's part of the sacrifice and nobody wants that part. So back testing is long, it's tedious, it's annoying. I'm sure, we've all got pictures of ourselves that our partners took of us like passed out on our computer doing a back testing kind of marathon. It's not sexy. And they don't see the connection to how that relates to profit. How does going through historical data, Mike, how does that relate to profit? Can I just find a strategy that works? But this is the practice hours. This is the technique work. This is the nutrition. This is the weight room. This is the long runs, right? This is the stuff that actually builds you into a successful trader or successful in whatever you're doing in life. And it's not fun. Let's just be honest, it's not fun. And because it's not fun, because it's work, and most people don't want to make that investment, they overlook it. They'll find another way. I'll tell you this one more story, and I don't want to rant too much. I spoke to this guy on, I think it was TradingView a long time ago, and he's talking to him about back testing, the importance of all this stuff. And he's like, okay, well, how many hours? Like, well, you got to, plan it out and then give yourself maybe, and take an hour a day. And he's like, well, I work and then I get home and I spend time with the kids. And then if I take an hour a day, I'm not going to have time to play Xbox. And I'm like, yeah, so you don't have time to play Xbox. I used to game too. And guess what? I don't game anymore because I replaced that time with trading. I'm like, you can, and he's like, but he just refused to do it. The value of playing Xbox outweighed the value of back testing. And that's not to knock this dude. Like, he made a decision. It's obvious trading isn't for him. And it's good to figure that out before you get into it, because he saved himself probably a lot of time and money. But the fact is, he had to make that sacrifice, something that he loved doing. He had to put that aside to fill that time with something that he doesn't want to do, but is eventually going to lead to him having more time. And that's the part I wish he understood. Like, hey, you invest a couple of years of not playing Xbox or limited Xbox play, and you gain freedom of time with trading, or financial freedom and freedom of time with trading. Man, you can play Xbox all day. But no one thinks 5 years, 10 years down the road. We're only thinking like right now. And yeah, that's it. That's it.
You made me think of my fantasy baseball days, because I used to play fantasy baseball in this league, and it was a money league, right? And it was where we would bid on players. And this was going way back before I really got serious about trading. And so like some of that mindset and using I was a guy that walked in with a laptop and the spreadsheets and all that. So that kind of bled into my trading a little bit, where like the organization part of it. But yeah, I ended up sacrificing the fantasy baseball to focus more on trading, because it's just like, all right, so I'm doing this league, and every year, the guys in the league hated me. So if there's anybody in the league that's watching, I'm sorry. But I would finish in the money every single year, and I barely watched the game. And it was because of the stats and the spreadsheet and like that kind of organization stuff. But I was looking at that league, and it's just like, if I took the time that I'm doing that, and I still put a good amount of time in that, but if I shifted it over to trading and focusing on building business and all these things, like how much better would that be? And so I ended up dropping that and going into trading. So the sacrifice. And one other point that I wanted to make, I think that everything is a sacrifice. Everything's a trade. So but we could sacrifice our future success, or we could do the thing that we want right now. Right. So either way, there's sacrifice involved. Either way, we're trading off one thing for another. It's just what's the priority? What do we want to do? Well, what's going to produce the best outcomes for us? Whether it's short-term, long-term, intermediate term, well, what's going to produce the results that we need? And there's a certain balance in there too. One of the things that I mentioned earlier that I also mentioned in the book is I was going so hard on finishing this thing that I was just everything was being sacrificed, like days, nights, weekends, all of it. And I wanted to, I almost didn't go on a trip with my wife, my daughter, and my goddaughter, and my in-laws, because I wanted to get another 30 pages done in the book, and I felt that I hadn't earned it. And I was sitting there, and my wife was saying that she was going to invite, ask me if I wanted to go, but she was like, yeah, you're probably not going to be able to go. I know that you want to focus on the book. And I'm just like, yeah, you're right. I want to focus on the book. And then I paused and I started to break down, because I wasn't allowing myself to do anything. And it's just like, well, what's worth more to me right now? The 30 pages today that I might be ahead, or going on this trip. And it was just for a day. So there needs to be some kind of balance, and it's up to all of us to figure out what that balance is. At a different point in my life, that balance might look very different. Later on, perhaps it's different. For everybody here, it's going to be different, but we need to be cognizant of what balance looks like, and understand too that balance doesn't mean that we're always even Steven. Balance is, we're kind of teeter-tottering back and forth, and sometimes the way to get anything is focused effort, but we need to rest, recharge, and allow ourselves some time.
Yeah, it's funny you mentioned that. A long time ago, I tested this strategy, and I broke it down by I'm in the Forex market, so it's 24 hours, and I found out that the optimal time to trade this strategy was like during the London Open, which is like 2:00 my time here on the East Coast. And back then, it was like, oh, we're gonna, grind hard, all the cliche stuff. And I tried waking up every night, like I think it was like 11 o'clock at night, and then trying to trade from like 11 o'clock to like 5 in the morning, because that was the ideal time to make that money, and just mentally, physically was torn apart. I destroyed everything just because my body couldn't operate. And again, you talk about the sacrifices. Some sacrifices aren't worth it, because if you're destroying yourself mentally and physically, what's the point, right? If trading is supposed to give us freedom of time, freedom of money, just freedom in general, where we can do what we want, have a clear mind, and be happy because we're achieving our why. If we're sacrificing our why to do that, what's the point? There's a really good trading book out there, not really talked about. It's called, it's a trading psychology book. I have it behind me. It's called The Winning Edge. And I remember it shared a story of this trader who went so hard in the beginning with his trading, and eventually lost his family. Like, he neglected his family. He took his losses home with him. So if he had a bad day in the market, he'd come home and be angry at his kids, angry with his wife. And one day he came home and they weren't there. And he had this realization that everything he worked for was gone. Right? He was working to do this so he can provide for his family. And in the journey of doing that, his actions got so poor that he lost the thing he was working for. Now he was all alone. And that scared the hell out of me. And that's one of the big stories that made me realize, you have to make sacrifices. You have to remember why you're doing it. You have to have priorities, and those priorities do change over time. But I love that you mentioned balance, because, just when it comes to like strategy in general, we need to find balance, risk, reward, win percentage, all that fun stuff. The same thing with our life. If we don't find balance in our trading, we're going to lose balance in our life. And that is in turn going to affect our family. And it's also going to affect our trading.
Yeah, 100%. One of the things that I mentioned before too, our trading has to fit our beliefs, our goals, and our ability to execute. Mm-hmm. Goals is not just money. No. Goals is lifestyle. Goals is and I don't mean lifestyle having the mansions and the yachts and the diamond watches. I'm talking about lifestyle as how much time do you want to be in front of the screens? How much time do you want with your family? How much time do you want to be able to go, and how much flexibility do you want? right? Like those things matter too when you're trying to figure out, well, these are my goals. You could have a system that can produce incredible gains, but if your other goals aren't hit, then you're not going to be able to execute that system well. So all things to consider. I want to wrap things up. I'm curious to hear, like, what are some other parting words of wisdom that you could give to people that are in relation to this broader idea of factor modeling, back testing, forward testing, anything that maybe people might want to like common errors that people might want to avoid, or something that like an aha moment along your journey that, yeah, you know what, like this really helped. Oh, well, what little tidbit can people get? And then, if they want more, they can find you over on tier1trading.com. And we've got everybody's name and social on the tradingmindwheel.com/lobby. They could go there, read your bio, get your social media links, and connect with you on your podcast and everything. So
yeah, here is, and there's many out there. Here's one that's overlooked, and one that most people don't pay attention to just because they don't know. Understand that when we're testing something, we're developing a strategy, testing a strategy, we have a desired outcome, right? I don't think anyone goes in to test something to prove it doesn't work. We all want it to work. And because we want it to work, we sometimes subconsciously sabotage ourselves in order to get that desired outcome. And especially if you're putting hours and hours and hours of back testing on the chart, right? If you're going to be doing manual back testing, it is a must idea to break it up. You don't want to do these marathon sessions of 5-6 hours, because you keep going it, you get stuck into this zone where your eyes get blurry, everything looks repetitive. I mean, if you look at candles for 4 hours straight, right, it gets boring and you miss stuff, so you're not as sharp. But you also start to sabotage yourself, meaning that because you want to see winners, your eyes only start looking for winners. Because you don't want to see losers, you start ignoring losers. And what this does is skew your data. Now your data has a greater expectancy than what it realistically has, because whether you know it or not, and some people do purposely do it, but most people, they're just not aware of it. You're creating more wins and eliminating more losses because you want that outcome. So you're sabotaging yourself. So it's very important, and this is what I always do. I want to look for losers. Right? When I back test, I want to find as many losers as I can, because I know that if I purposely go into a chart and I'm trying to find as many losers as I possibly can, I'm even talking borderline trades. So something that maybe just comes 1 pip above the stop loss right there, but doesn't stop it out. Hey, I'm counting that as a loss, right? Maybe I got slipped, the spread, the broker, you know how it goes, right? I'm going to count that as a loss, because I would rather have my back testing show me the worst possible results, right? So anything that's borderline, I want to get the worst possible results, because if I can look for the worst possible results and it's still positive, man, I got something. Right? So look for losers is a good tip, I always say. And you can always double check your work as well. And that's one of the things of doing multiple rounds. Maybe you do it once, and then when you're done, just kind of go through it one more time just to make sure, because our eyes do change, and we're human beings. This is one of the negatives of manual back testing, is that we are humans. We are going to miss stuff. We're going to make errors. You don't get that with the automated stuff. But yeah, look for the losers, and try hard to ensure that you're not self-sabotaging yourself. So you're not saying stuff like, I wouldn't have taken that one because, it was 5 o'clock, and, don't make those excuses. Try to get as many losers as you can, and understand that if you can get the worst and it still performs well, you probably have something that's pretty good.
Akil, that was an amazing answer, and this has been absolutely incredible, man.